However, in our case, the next journal entry we're going to look at is the purchase of DVDs. In other words, we bought more inventory. So we received 5,000 DVDs from the video from our wholesaler, KLD, and we're going to our manufacturer. I'm not sure. Doesn't matter. The invoice was $18,367. The terms are 2% of a discount if we pay within 10 days. Otherwise, we pay the entire amount in 30 days. That's what 210 net 30 is. Take advantage of the discount at the time of the purchase, right? That's important. It says take advantage at the time of the purchase. So we want to treat the purchase as if we took the 2% discount from over here. This is where a lot of people miss this, right? So what we do, well, we go over here. Let's go down to a new area. We want to increase our inventory, and we want to pay, increase our payable to the place that we owe them, right? KLD is where we bought it. So we would go down to our accounts. Well, we would go down to our journal entry, and we would increase our inventory. So we debit inventory, debit the asset, credit the payable to increase payable. Now the reason I didn't go with 18,367.35, which is the invoice amount, is because we're treating it as if we took the discount, the 2% discount. So if I multiply this by 98%, right? We took 2% discount, so we're only going to owe 98%. We're going to treat it as if we took the discount in the beginning and not wait until the end. You can do it either way. Some companies would put the entire amount, the $18,367.35 here, and then if they pay it within 10 days, then they do a sales discount adjusting entry. This company takes it in the front end, right? And they if they end up don't taking the, they pay them too late, then they would have to go in and do an adjustment. Anyhow, the point is, we want to adjust it in the beginning and treat it as if we took the discount. So this is our journal entry, and so it's pretty simple. Then we increase our inventory, increase our payable, 18,000. So you need to make sure that amount is used. All right, so what does this mean? Well, we have more inventory, so we need to go to our inventory ledger, right? So we go down here, and now we do another layer, another level, right? And we're going to do it for the purchase. So we're going to take all this information, copy it, and paste it here, change the sold amount to a purchase of 5,000 units, and then we want to add the 5,000 units down here. So you can do it several ways. If you know Excel, you can right click and then insert, and that would insert a row there. There's different ways you can do it, but that's one way. So now that you have a new space here, you put January 5th, we bought 5,000 videos and we paid $18,000. Where did I get the $3.60? Well, I take the 18,000, divide by 5,000, I get $3.60. So I get that by taking the amount we bought them for, divided by how many we bought, gives me the cost per unit. One thing I almost forgot to mention is this inventory balance, right? It's this number here and here. All this is all of these layers added up. So if I add all those layers up, I get 98,390. If I add all 5 of these up, I get 116,390. I have some notes here that I put. You won't see these notes in your work. I put them there to help explain what's going on. Again, you just keep doing this until you just keep up with this inventory ledger every time you have a buy or sell, and that way you know how much your cost of goods sold are and how much your inventory is at any time. You need to know. Alright, so that was when we bought the videos and we owed them. What if we wanted to pay somebody, right? On January 5th, it says that we paid Custom DVD, another supplier to us, right? So we want to go ahead and pay them. It tells us in our information over here, we issued this check, $564, to pay the amount that's due. How do we know how much is due? Well, if we look at the general ledger, that tells us how much accounts payable is due in total, but we don't want to know that. We want to know how much Custom DVD is due from us. So we need to go to the accounts payable ledger that gives us specifics on each person that our company that we owe money to. The first one happens to be Custom DVD. It shows that we owe them $12,375. So we go to our journal entry and we say, that's the amount that we need to reduce the payable for and increase the cash. And decrease the cash with the credit. So we reduce the payable, reduce the cash, debit to reduce a payable, credit to reduce an asset. Alright, so next we want to look at the payroll. Now payroll is made up of three different things. The payroll amounts that you owe your employees, the payroll expenses, payroll tax expenses, and then the amount when you actually write them a check, right? So let's say you get paid, this is just the general amount, let's say you get paid every 10th of the month, right? But you get paid for every 10th of the month up to the 30th or 31st of the last month. So on the 30th or 31st of the month, the company does a journal entry to record that, and then on the 10th, when they pay you, when they write you a check, they do another journal entry. So that's what these three are. So they pay them on the same day that they do the payroll. So here's how much they pay the officers. Here's how much they pay the non-officer employees. Here's how much they withhold from their amount, from their checks to pay the different federal and state authorities. So we're just going to look at this one first. If we look over here, we see the total expense is $10,000 and $4,250. But we want to reduce that for the federal and state withholdings, right? Federal withholdings, state withhold. There you go. By the way, the federal withholdings here are $4,058, includes the both $2,975 and the $1,083. You know which one to use because you know based on your chart of accounts. Anyhow, so these numbers here and here come straight from this information here. The only number that's different is how much you actually, the net amount that the employees walk home with, that they get to keep, right? So if you put this number in, this number in, this number, this number, the whatever is left is the payable, right? So this number, if you add these up, right, you get 14,250. You add these numbers up, you don't get 14,250, you get 4,628, I believe. That does not, they have to equal, debits have to equal credits. So the difference is 9,622, right? Think of it like this. This is the gross amount on the employee's checks added up. This is going to be the net amount after you take out the withholdings. All right, the second part of payroll is doing the payroll tax expense, right? This is the part that the employer pays to the federal government and state government for having employees. You do the payroll tax expense account last, so you can put this account here, but don't put these here. Don't put the total amount here yet. So put the description here and then do your credits. Go over here and do your credit for 1,083, 1,414, and 540. Right? Add these three up, it comes out to be 1,737. There you go, right there. So the way you do this is you first put the description in, the account description without the amount. You put your credits in, all three of them, and then the difference goes here. And finally, you have your the time when you actually pay the employees, right? Up here, you just owed the employees, but this is where you actually write the check. So we issued check 570 for the amount of payroll that was due. The amount of payroll that was due is 9,622. So we just reduce this wages and salaries payable. You can do it like this. I would prefer you to use the chart of accounts, but as you can see, I'm a little bit off here, but that's okay. Hopefully you get the picture. Use the same account for both of these. Let's see what it says over here. Wages and salaries payable. So it should say the same thing over here, just without the. Remember, debits are all the way to the left. Credits have an indentation to the right. We paid them 9,622. So there you go. So we're finished with payroll. I put some little descriptions over here in case you're coming back and reading them. The last thing we're going to talk about is the adjusting entries. I'm not going to do the adjusting entries for you because these are all very common adjusting entries. But they list them at the very bottom, and you can see that they all there's 6 of them, but there's only 5 different kinds because the last 2 are both depreciation. So you do, at the very end, you do your adjusting entries. You can do another little heading here for adjusting entries and then list them out, your debits and your credits, or you don't have to put a heading if you don't want to, but a lot of people do. But these are just basic adjusting entries. You just need to make sure you do an adjusting entry for insurance that is expired, supplies that have been used, allowance for doubtful account, and then your depreciation.